US dollar strength predicated very strongly on what the Fed is intending to do in 2022. How much dollar strength do you think is yet to be priced in?
Yeah, so our view for some time has been that the dollar peak is not here yet. We've been dollar bulls. We've gotten some pushback recently just on the idea that, oh, wait a minute, the Fed's overpriced now. Clearly, the Fed is not overpriced. I think Powell last week made that clear. And I think, the market's been trying to chase the Fed because, this is a very unusual cycle. So, we recently, we changed our forecast for the Fed looking for 5 hikes this year. But I think the market is still going to be in some sort of price discovery mode. The idea of quarterly Fed hikes as being the ceiling of how fast the Fed can go, I think, obviously last week, Powell kind of undermined that idea. You have to remember that before the last cycle, pre-GFC, a normal Fed hike was, 8 times a year. So I still think there's some price discovery here. We don't think the dollar peak is here yet. Typically, the peak of the dollar comes about 1 to 2 months after Fed liftoff. So by that historical benchmark, we still have a couple months to go. And by historical benchmarks, we could see 2 to 3% higher on the trade-weighted dollar.
Yeah, okay. So, well, the consensus seems to be more dollar strength in the pipeline, but which currencies are going to suffer the most against a resurgent greenback?
Specifically on the Fed story and on U.S. rates, we would like to position long dollar versus the low-yielding other reserve currencies, specifically those where their central banks are lagging. So we think ECB lags quite a bit. We have been strategically short euro dollar for some time. We kind of actively resold euro dollar. We think a testing of the 110 level is a minimum for that trade. We also put on long dollar yen, which, again, will be subject to kind of Fed repricing. But we do have a barbell strategy on the dollar. We think both the right-hand side as well as the left-hand side of the dollar smile is in effect. So we do have long dollars against some high currency. So we're short Kiwi dollar, for example.
So let's talk a little bit about the left-hand side of that smile, because this GTV chart on the Bloomberg shows that crude prices are near that 7-year high, right? So if you have these oil-linked currencies also gaining ground, where could that lead the dollar?
Well, so obviously right now commodity prices are quite strong. We don't want to be short the high beta currencies that have that commodity exposure and that have credible hawkish central banks. That's not where we would want to express the left-hand side of the dollar view. But there are EM currencies, for example. We think we are generally underweight EMFX just on the idea of a Fed repricing. And then obviously there's the situation going on with Russia, Ukraine, and the U.S. But one thing that we wrote about quite recently is the idea that if you get a geopolitical shock driving oil prices higher, the oil currencies you have to be a little bit careful on. Typically, oil prices go up, petrol currencies go up. But if it's because of a supply side shock, an acute one, because of geopolitics that undermines potentially the risk environment, then historically these currencies actually don't benefit from the higher oil prices. So that's kind of a warning that we've kind of put out, that it's not necessarily obvious you want to be long petrol currencies.
Is that also a reason why within emerging markets you don't necessarily like LATAM, because there are many commodity exposed currencies there? But at the same time, I have to wonder, doesn't it give you some pause that they've also been pretty fast at tightening preemptively even before the Fed's latest moves?
Yeah, this last cycle has been odd because the EM has significantly led the Fed and developed market banks in hiking. But that has been going on for pretty much a whole year now, and EMFX has not been able to benefit from that. Our EM colleagues have kind of tried to diagnose this quite a bit, but high inflation is a problem in EM, especially in LATAM. You have a lot of idiosyncratic political issues that are holding them back. And generally, one key message from our EM colleagues recently is that higher carry in EM so far doesn't look likely to shield the EM currencies from a repricing of the Fed. So again, generally, they're underweight. If you have EM longs that you like, the recommendation is to fund it out of something other than the dollar or express it in RV terms.